Hello, I hope you guys doing good. Today we're going to talk about something very interesting, and it's the collaboration between Signal Center and ThinkMarkets, and how Signal Center are helping ThinkMarkets traders to trade, I would say, more structured and more efficiently. Are you tired of guessing when to buy and when to sell? It's a very typical thing. A lot of people start investing and trading in the markets have high hopes. Maybe they read things like the Financial Times, or maybe they just read the general news, hearing about stocks going up, Bitcoin going up, gold going up, the dollar strengthening, the dollar weakening, and they get interested in trading the financial markets. However, as they start trading, they have some profits, they have some losses, and they start to realize that trading is not necessarily as easy as they initially thought. That's where Signal Center comes into play, and they help us make better sense of the markets. But before we start, I need to show you the risk disclaimers, just because of the risks that are part of trading the markets. So we're hosting this presentation both for our FCA and UK clients, but also for our European clients. So let's spend a couple of seconds here so you can read, and then we're going to continue with the presentation. I need to show you this one as well. This is a little bit of a special one. And the reason for showing you this is because we're going to look at data here, but it's simulated performance results. So it's not actual trading results. Instead, is how have, for example, these signals performed over many years. And the data we collected are coming from Signal Center directly. They are collected manually. And we're talking about thousands of trades. And we're focusing on some of the signals there. And obviously, if we look back over the last couple of years, we know what to do good, we know what to do less good. But just because it's simulated, we need to understand the risks involved with that. So we're going to spend a couple of seconds here as well. Okay, good. All right. So what are we going to talk a bit about today then? We're going to talk about essential factors for traders. We're going to talk a bit about how Signal Center helps to solve all these pressing issues of traders, and why ThinkMarkets have partnered with Signal Center over other providers. After that, we're going to take a look at something really interesting and important, of course, is what are their performance, and then how to actually use the signals. So that's what we're going to cover today over the next 25 minutes. If you have any questions, you're most welcome just to drop them in the question box, and we'll answer them as soon as we have covered the main part of the presentation. Who am I then? Well, my name is Alejandro Zambrano, and that's me here in the picture. So I'm the former chief market strategist at several major licensed brokers. I've been in the industry since 2005, and in 2009, I started to work in the UK after completing my master's degree in 2008. Well, 2009 to be correct. I started in 2008 and completed in 2009. And I've been a professional analyst since then. I've been all over the world, holding different presentations, all the way from Southeast Asia and the Philippines and mainland China, all the way to the UK, where I have been based since 2009. If you wonder where I started then, well, I actually started in Sweden, where I was born, and I did a bachelor's degree over there. Most important though, I've been trading since 2006. So because I've been trading for so long, I tested so many different strategies. Some of them were profitable for me, some of them were not profitable for me. So I have accumulated a wealth of information. So if you do have any questions, definitely a good time here to pick my brain if you do have any questions in regards to trading. As I said, I've been trading for many, many years, and I've done that successfully as well. All right, so what are the essential factors for traders? Now, you might walk away from this presentation and not necessarily be too interested in Signal Center, even though I hope you will be. But what I'm going to cover in the next slide or two are super important and something that you need to think about if you want to be able to trade professionally and, more important, profitably in the long run. So let's take a step back. Can you wake up one morning and become a builder, a doctor, or a Michelin-starred chef? Obviously, you can't. Even though I think I'm quite good with hammer, ask my wife, she wouldn't give me one if I asked for one. Joke aside, I'm not very handy when it comes down to repairing things at home. Very good with the markets though. Long story short, both the builder that is building a house or building a skyscraper and a doctor and a Michelin star chef, what do they all have in common? Well, they have a recipe. They have a systematic approach for doing things. So the builder building a skyscraper, he knows that the cement and the concrete, the steel, everything has to be in certain proportions. They have worked with the architects and other engineers to build something that couldn't withstand, winds, earthquakes, whatever can impact these buildings, depending on where they are in the world. It's the same thing with a doctor. They will go for years and years since at school to learn how to figure out what people have, what kind of issues they have, and how to fix that. Same thing with a Michelin star chef. They have some sort of a formula that allows them to produce superb food every time for the clients. And they all have a systematic approach and many times a tested approach, otherwise they wouldn't be successful. And the reality is that it's not too different if you are a trader. You need to be able to have a systematic approach when you come down to trading. What does that actually mean? It means that you need to have an idea of where to buy, right? You need to also know when to sell. You need to know where to put your stop loss, and you need to know where to put your take profit. Those key elements, they're not going to look the same always, but you need to have a rough idea when to buy and when to sell. You can't just wake up and be like, hey, let's buy a bit of gold, or let's buy a bit of dollars, or let's buy a bit of Bitcoin. If you do that, and say you're a long-term investor and you're happy to hold the position open for 3 months to 12 months, then yeah, maybe you'll be fine as long as you don't have too much leverage. In other words, as long as you don't open a position that is so much bigger than what you have in your trading account. So that could work sometimes. But if you're looking to trade, if you're looking to get in the market today and maybe sell a few hours later, sell a week later, and sometimes even sell a month later, you do need to have a good view on where to put your entry orders, where to put your stop loss, and where to book profits, and so on and so on. Now, obviously, when you get in and out, you won't always get the best exit. You won't always get the best entry either. But at least you know that if I do this and I trade like this over the next 100 times, then I will get the best out of these 100 times, if that makes sense. The other bit as well that is not much talked about is how much to risk per trade. Because you see, you can have a system that could be really, really good. But when you lose, if you lose too much and you have risked too much per trade, then there's obviously a risk that you blow up, right? And that's also something that needs to be addressed. Now, the great thing is that Signal Center help us to solve all of these problems. They do provide a systematic way of buying, systematic way of selling, stop loss, take profit, and also how much risk per trade. Now, you might not necessarily like everything about today's presentation and the way that Signal Center operates, but remember, if you're sitting at home right now and you're trying to build something, make sure you have these key ingredients when you're looking at your trading. So, who is behind Signal Center? This is Joe. He's the Chief Investment Officer, and this is his colleague, Steve O'Hare, which is the Chief Operating Officer. Now, the guys here set up Signal Center in 2007, and they become FCA licensed in 2018. Now, these guys are famous because they work primarily with top-tier brokers that are super interested to have their clients succeed in the markets. Now, Joe is a member of the Society of Technical Analysts and a charter member of CISI, and he used to work at HSBC. Steve, on the other hand, he's been trading for some 30 years, started with commodity trading on the Baltic Exchange before moving to life and financial markets. So these guys are extremely experienced. Again, they've been doing analysis and helping traders since 2007, and in 2018 they became FCA licensed to provide advice. There are not many of these firms that are providing signals and that are also regulated to provide advice. And again, they've been around for many, many years, which is a key factor for us working with them. But there's more to it than that, and I'm going to explain that in a minute or two. Now, let's take a look a little bit of how to use the signals and how they're loaded. So these are the signals. The dashboard looks the same independently if you access the signals via, for example, Think Portal, or if you have them installed on your MT4 and MT5. So this is the dashboard. I know there's a lot of things happening, but it's not too complicated. First things first, if English is not your first language, you can always change the language up here where the arrow is. You can then change the signals depending on the type of signal that you're interested. If you're looking to place a sell limit or sell stop, or a buy limit or buy stop, or you're just looking for live trades, then this is a section you want to go to. I would assume that most people are interested in live trades only, and not necessarily the other types. Then you have asset classes. Maybe you love Forex, but you don't like commodities. You can always filter here to find what interests you. Bear in mind that crypto is not available for UK clients because crypto CFDs, as we know, are banned in the UK, but they are available if you're trading, for example, in Europe via our CISIC entity. There's a confidence score at the very top. So that confidence score is actually something that the analysts themselves, so the team at Signal Center, they assign the confidence score to their signals. So you can list, for example, something they're very confident in and something they're not too confident. You can filter there. For example, if you look here, the first one has a score of 20%, the other one has a score of 40%, and the fourth one has a score of 40% as well. And it's up to you which one you want to choose here. What is quite interesting is actually that Joe told me that the confidence score, while it is important, is not really important in the long run. And we'll talk more about that in a couple of minutes. Now, if you're ready to learn more about a signal, you would actually just click on the buy or the sell signal, depending about the signal at that time. You might think that just clicking on buy here is going to initiate, right? That's going to initiate a trade on this, but that's not correct. In fact, these buttons, they're more like learn more buttons. So when I click on this button, this is going to load. So here you find a bit more information about the signal. In this case, you can see the buy signal. You can see the target 1, target 2, and then you have the stop. You also see the asset you're looking at, and you can see the current price. Now that current price is just there. It's not necessarily the latest price, because the latest price, you can just look at that directly in your ThinkMarkets MT4 or MT5 account or ThinkTrader, depending on what platform you are using. So this is the information up here, and the same information is presented to you visually here. You can see this is the price chart is a 4-hour chart in the New Zealand dollar versus the USD, and they want to be buying here at 62.20, which is the same level as here, with the stop loss down here, and having a take profit over here. What more? They give you a little bit of a text to better understand their view. They talk a bit about volatility events. So what could be something that could trigger this trade? That's there as well. You can scroll here to see what's going to impact New Zealand dollar versus USD over the next couple of days. They also have added some extra support and resistance levels. Now, these sections is not directly linked to the actual signals, so you can ignore that if you want to. And I asked them, so why did you put them in the dashboard if they're not part of the signals? And they said that, well, some more sophisticated traders, they want a bit more information than this, will sometimes use them. And apparently it's quite popular, but remember, they're not necessarily directly linked to the actual signal. There's a few other bits and pieces here that they also share. This is the confidence score. So that's the confidence we just talked about. If the analyst that is producing this idea has a very high confidence that this is going to be a profitable trade idea, then he's going to mark this one with a very high confidence. On the left side here, you have a gauge, and that gauge is looking at the news for New Zealand dollar versus the USD. So is the market bullish or is the market bearish New Zealand dollar versus the USD? As you can see here, is marked 50. That means that the market is neutral. Now, what they do at Signal Center is that they look at many different news reports about the New Zealand dollar, and then they use an algorithm to try to figure out the score. Now, you will sometimes see that the news score is bullish the New Zealand dollar, but the guys themselves are telling us that the market could trade to the downside. So there's no direct link, again, between the signal here and this little gauge up here. In fact, I would ignore that gauge altogether if you're interested in the signals. What else? Well, if you are trading on MT4 and MT5 and you have installed the EA, that will be the expert advisor, then you have this button here which is called Trade Now. It's quite a neat button because if you like the trade idea, you just click on it and this is going to load. So it will load a window with the entry price, your stop loss, you take profit, all of these different levels that were up here. So you don't have to manually add the levels. You can literally just log into your MT4 and your MT5, and then you click on trade now, and everything is prepared. What you need to do though is to figure out how much to risk. Like, do you really want to, like the default level is the smallest level. So is that a risk you're comfortable with, or do you want to increase it? Yes or no? That's what you have to do. And when you're done with that, you click on place. Now these signals are not available on TT Web at the time of this webinar, but they will be live in the next month or two. So if you're looking at this presentation maybe in July, I would argue that you'll probably find the same setup within TT Web and would be able to just click on a button and everything is going to load for you. Now, why should we pay attention to Signal Center, and why do we actually interested to work with them? Is it because the nice features, easy way of issuing signals? Is it because of that? Well, that's part of it. You know, it's always need to be able to load things on MT4, as you can see here, but that's not really why we opted to work with Signal Center. You see, the reason why we opted to work with them is that they provide 5 years of track record. Track record effectively means that they have been issuing signals for over 5 years, and they have actually stored all those signals. So we actually know how these signals have been performing. Now, I promise you, if you go to, for example, any other signal provider, they're gonna show you data for the last couple of months at best, sometimes for a year or so. And most of the time, they don't even give you anything. They're just gonna tell you, sign up here, and you'll be rich, something like that, right? That's your typical signal provider. So they don't tell you how much you can make. So you just have to go by their words. And usually you might be recommended by someone and they're gonna tell you, oh yeah, invest here, but they don't have any data. These guys have 5 years of data, and we're gonna look at the data in a minute or two. What else? Signal Center are FCA regulated. You will not find a lot of people that are regulated to provide signals. Now, there are some risks involved with the data we're going to look at in a couple of minutes. It is manually collected. What does that mean? It means that the analyst does his analysis, and then when he's done, he will literally register this into an Excel sheet. And that's how they've been doing it. They're working on automating this. So there's always a risk that sometimes people, enter the wrong data or something like that. But what's interesting is that the data here is for so many years. So even if they would have done some mistakes in the process, which I don't think they would do, because we're talking about thousands of trades, then the risk of manual errors becomes less and less, as you can probably imagine. Let's take a look here then. Well, before we look into to understand what performance is, before we look at the actual data, let's talk a little bit about some of the key terms I'm going to be using next. I do know that some of you guys have a lot of experience and you know all of this already, but the majority of people might not know, and that's why I want to start with this. So what's a return then? So return is simply what you would have made on that investment. So for example, if you have $1,000 and you make 100% return, then your account has grown from 1,000 to 2,000. Simple as that. What's a drawdown then? Well, imagine you did invest $1,000 and you have a drawdown of 50%. That means that at one point your account went from $1,000 to maybe $500. It could also mean, for example, if your account went from $2,000 up to $1,000, down to $1,000, then that would also be a 50% drawdown. The other bit is simple, is win rate. So say that you trade 100 times and you win 40% of the time and you lose 60% of the time. Well, then your win rate is 40%. The other bit here can be a bit complicated. What's the average risk to reward, or R over R? So say, for example, that you're playing a game with me. We are playing a game where we are literally flipping a coin. Now, if you get heads and you win $2, and when you get tails, you lose $1, then your risk to reward is 2. So you win, and that's it. On the other hand, if you win $1 and lose $1 when you lose, then your risk to reward ratio is 1. I hope that made sense. Trades, it's just a number of trades. They trade 100 times or they trade 1,000 times. So now you know a little bit on how to understand this next few slides. But before we go into that, I want to talk about something else which is super important. Is the risk per trade in percent. And again, I know this could be maybe a little bit too complicated if you're completely new to trading, so I'm going to try to break it down. because it's a key concept when you speak with any type of trader. All right. So imagine you have $3,000 in your trading account and you say, okay, I want to risk $30 per trade if stopped out. So 30 over 3,000, that's 1%. So what does that actually mean? Well, look at this. This is the S&P 500. The idea is buy here at 3,980 with a stop loss at 3,950. If I buy here and we go down, I want to lose just $30. And as we know, $30 is 1% of my account. So when a trader is telling you, all right, I have a risk per trade of say 1%, it doesn't mean that they're gonna open a position where they have 30 of just $30. If the difference between the stop loss and the entry is very low, they might have opened up a position that is far bigger than 3,000. Does that make sense? Let's logically try to think about this. So if, for example, the difference between this level and this level here is 1%, just imagine it's 1%. In that case, of course, we buy for a position value of $3,000, okay? On the other hand, if the difference between the entry and the stop loss is 0.5%, and I still want to lose 1% of my capital if I get stopped out, then of course, I'm not buying for just $3,000, right? I have to buy for the double, 6,000. That's a simple example which explains this concept. Long story short, the difference between my entry and my stop loss should equal a certain dollar amount, and that dollar amount is going to be a certain percentage of my account. All right. The reason why I go so much into this is because I use it to figure out how much to risk per trade to achieve a certain return with a certain risk profile, as you will see now. So this is the data that we have from Signal Center. Now, they issue 40 signals per day, and each signal would usually expire within 24 hours. What does that mean? Is that they will be triggered maybe during the day, and then the next day, they will close out the position. If the position hasn't reached a stop loss or its take profit level, they will manually stop it out, even if it's in profits or even if it's in loss. All right, very important. Now, they produce signals in 40 different markets, but if you look at the best signals for the last 5 years, then these are the ones. So they produce good results in the DAX and the Nikkei and the Nasdaq 100 and the China A50. Those are the stock indices that they perform the best historically. As for currencies, they produce good signals in Australian dollar versus the Japanese yen, the euro against the British pound, the euro against the New Zealand dollar, the dollar versus the Swiss franc, and the euro against the Swiss franc. They do, of course, produce analysis on things like the Euro USD, but the results over the last 5 years were not good enough to put them on this list. The other bit as well is that they do good signals in Ripple, signals in Bitcoin and in Ripple and in silver. Once more, they do produce analysis for gold, but again, it wasn't really as good that I wanted to include it in this list, and that's really important to remember. Now, it doesn't mean that their Euro USD signals for the next 5 years are going to continue to be bad, or not bad, but not as good. It doesn't have to be like that. That's the problem with trading sometimes, is because historical results can unfortunately not be relied on for future trading. But I'll ask you this question. If you're going to choose a signal provider, are you going to choose one that had rubbish results over the last 5 years? Or are you going to choose the one that had good results over the last 5 years? I know which option I would go for. So these are the best signals. So how would that have worked out if we traded all of these different signals? Well, they produce 4,935 signals per year. So imagine every day updating the signals for all of these markets. Now, some of them are going to be executed, but it's unlikely that all of them are going to be executed at the same time. Now, imagine I'm putting 1% risk per trade. Now you might wonder, now you might understand why I was talking so much about that. So I'm going to put 1% risk per trade. And if I would have done this every day for the last 5 years, then my capital would have increased with from 1,000 up to 4,000. So a $400% return, 400% return. My drawdown would have been a low 19.37. Now this is extremely good if you compare with the S&P 500, because for example, the S&P 500 since 2017, it had had many drawdowns of 20%. And if you remember COVID-19, for example, like during COVID-19 in 2020, this system was making money. Whereas as we know, a lot of people lost money on the COVID because they literally sold at lows and then they bought when the market was already up quite a bit. So you can see that this system is very good when the markets are volatile. And comparing that and that is a huge difference. But what do we need to bear in mind here? Well, with the S&P 500, if you buy a mutual fund, you literally click on buy once, and then you don't have to do anything extra. Here, you would actually need to be active. So what's the benefit of being active? Well, you're looking at a 400% return instead of literally looking of a return of, I think, excluding dividends, you're looking at a return of about 80%. So that's a huge difference in return. Now, looking at the win rate is not too high. It's 46.81. Now, if you're new to trading, you might be heading for the exit right now because you think, oh, how is this working out? Well, the reason why this works out is because when they win 2.35. So the average win is 3.35 times bigger than the average loss. So think about that coin game I was talking about. When you win £2 or $2. And when you lose $1 or £1, all right? Imagine you have to take a step. Half of the time, you take 2 steps forward. The other half of the time, you take 1 step backwards. So obviously, 2 steps forwards, 1 step backwards. 2 steps forwards, 1 step backward. So you will reach your target. It's just going to take a little bit longer. And this is exactly how this situation is. They're taking 2.35 steps forward versus each time they lose, they will take 1 step backwards. And that's why the return win rate doesn't have to be that high. 46.81 is perfectly fine. Now, if you do go out and find another signal provider, you might find some of them that have an 80 or 70% probability of being right. But the challenge is this, they're gonna make a couple of pips each time. Say they make 10 per return, but then when they lose, well, what do they lose? 100 pip, 50 pip. Sometimes they lose the whole account. So they have an inverse risk reward ratio, which is obviously not a healthy way of managing your trade account. Now, what if we are interested to take a little bit more risk, right? Well, if we're risking 2% of our capital per trade, then the return becomes extremely good. 690% return with a drawdown of 38.52%. And that's quite a strong drawdown, so it's definitely not for everyone. But in this situation, a grand becomes almost $7,000. How can you access these signals? Because I'm sure you want to try this out on your own, see if they match with your trading personality or not. It's actually extremely easy. So if you're a client of ThinkMarkets, just go to client login, hit on Think Portal up here. So go to thinkmarkets.com. You can download your MT4 and MT5 indicators. That allows you to load this in dashboard. Remember, in the desktop, remember that it's not possible to install any custom indicators into your mobile. So you need to do this via desktop. You can also access things via the online dashboard. So you can just go into your client portal and see them there. Now, the online dashboard, you can also load that via your mobile. So you can perfectly fine just log in here and then copy over the information if you wanted to. Now, if you are not a client of ThinkMarkets, but you're thinking of maybe trying us out, then it's super easy. It doesn't cost anything to open an account. You just click on create account and then click here, create a live account. And then you need to fill out your information. It's very straightforward, simple questions, and we'll ask you simple stuff like what's your passport or ID, proof of address, especially here in Europe, UK, and in EU. Now, this process is actually automated. So for most of the clients, it doesn't take more than a couple of minutes. We're looking at maybe 2 minutes. In other regions, it might take a less, and in some other regions, a little bit longer. But it usually just takes a couple of minutes to get things going. Now, it's perfectly free to open an account, but because Signal Center, they are providing a service to us, we are paying them for ThinkMarkets clients to use them. So to make it more fair for everyone, there are some minimum deposits. So if you are based in the UK, it's enough that you have the equivalent of $500 in your account. I do recommend to start with a little bit more though, maybe 1,000, just because if you drop below $500 equivalent, then effectively you can't use the signal. So a bit more than $500 or the equivalent is what I would put into the account. Now, if you are in the EU, you need a ThinkZero account to access this. A ThinkZero account is a type of MT4, MT5, which also has a $500 minimum deposit. And that's the way, because in that region, the signals are attached to that type account. Again, it's all free. You can literally open up, give this a try. 2-3 weeks later, you don't like it. You'd be like, oh, I don't have time, or, you know, I don't like the interface, or whatever it could be. You could always just close your account and withdraw your money. At least you gave it a try. So 5 minutes or so, that's what it takes. What other reasons, except the fact that it's free to try out the signals, would be a good reason to get going with trading today? Inflation, right? Inflation is coming down now, but inflation is still very, very high. Some people, myself included, made some really good returns in the past just because of these inflation trends. We already know, for example, stock markets are up quite strongly just because inflation has come down. So inflation is something that's always around, and having something like Signal Center can help us navigate those markets. We have interest rates as well. Hopefully they're peaking now. So that's something else that can create market volatility. We had the Russia-Ukraine conflict, or war actually, to be correct. That has slowed down, but you never know how things could, become worse for them locally, but also in the world. And then you got the strong and weak dollar that's coming and going in waves. You got the Bitcoin halving next year. And the great thing is the Signal Center helps you navigate these markets, right? So I like them because a lot of the clients, they have a rough idea, like they know or think, because they're reading online, they think, all right, gold is going to go up, or gold is going up. How can I execute that idea? Well, one way is to go in here, for example, and see what Signal Center are saying, and then use that information with your information, merge it. That's how I would use these signals. Because the worst thing you want to do is just read the Financial Times, and then you just buy blindly, again, with no stop loss, with no take profit. And then either you find yourself with a very huge profit, or you find yourself being stopped out. And that's not a nice experience. The latter, that is. The big profit is always nice. So there's a ton of stuff happening. And again, it's very, very good time to get involved in the market. According to me, of course, what you want to do is completely up to you. Okay, guys, I want to thank you so much for watching.